Are you looking for a Monday trade? I got a spicy one for you. Lots of volatility, over 100% implied volatility, which means big, big premiums. I'm going to walk you right through it using my screen. Rocket Labs, move over Elon Musk. Peter Beck is in the house. Billionaire Peter Beck founded Rocket Labs. And I love trading billionaire stocks because I just feel so much more comfort knowing that a billionaire is at the helm of the company, right? So it's probably not going to go bankrupt. Now, again, this stock might not be for everybody, but it might be for some of you out there. And I like to give you guys different ideas: low cost stock, high cost stock, stocks that have really juicy premium. And I want to walk through all the details for a Monday trade with you right here. Let's jump right in. All right, so let's check out Rocket Labs and let's just take a look and see what it's been doing for the past year, right? This is a 1-year chart. Just shows you kind of up, down a little bit, sort of slow and steady. Then it kind of shot up about a week or 10 days ago. And Friday, it closed down 1%. Now, when stocks go down, put prices typically go up. So you get paid more for the risk that you're taking. I'm going to show you a really cool trade that you can make on Monday. Now, Rocket Labs closed at 66.27 on Friday. Let's take a look at the puts for Friday, October 24th. That means you'll hold the trade for 1 week. I like short-term trades. You're not tying up your capital for a long period of time. And let's just take a look at a $60 put. Here's what that means, guys. Rocket Labs right now is at $66. So if it goes below 60, you're committing to buy 100 shares at $60. For that commitment, you're paid a premium. You get to keep that premium no matter what happens. So this particular contract last traded at 1.15. That means $115 gets dropped into your bank account for making the trade. How much capital do you have to put up? Well, in this scenario, this is a $60 put. So you'd have to put up $6,000 in capital to make $115. Not bad for 1 week's time. Now, check out the implied volatility. Like I said, the implied volatility is super high, 102%. That means that it has a lot of swing up, a lot of swing down. The reason I like high implied volatility is it gives you a sense of, okay, if the price comes down and I have to buy the shares, that's cool. I could turn right around and sell a covered call against it. And if the stock keeps going lower and lower and lower, no problem. If you have enough capital, you can sell another put as the price goes down. And then if you get assigned those shares, you're averaging your price down, right? It's a very good strategy to use. Again, I'm not recommending any particular stock. I'm just opening your eyes to different opportunities that are available in the marketplace to give you a steady stream of income each and every single week. Anyway, I hope this helps. If you like the video, smash the like button, subscribe to my channel. I'm putting out a new video each and every single day, talking about selling puts, talking about selling covered calls, walking through different stocks. If you want to learn more, I'm running a free live event. It's great for beginners. And I'm going to show you exactly how to sell a put, how to sell a covered call, so you can make money for yourself each and every single week. Thanks for watching.